Good morning, everybody. Hey, welcome to Thursday. It is May 26th. I hope your week's going well. Hey, Wall Street's been a little up, a little down, and we'll talk about that and more when Dave joins us here in just a few moments. Before we do that, though, let's remind ourselves again that there's a lot of things out in the world we cannot control, but you can control how much risk you have in your current portfolio. The problem is, do you know what that risk is, and how does it relate to your risk tolerance? That's what we work through in our core retirement design. Give us a call and schedule your free, no obligation, 30-minute phone consultation. 863-382-0037. With that, we got Dave coming up next.
5, 7, I'm Daughtry and Morning Dave here. It's 8:41 now, 19 before 9. Real important day from the economic reports on Wall Street. We don't know how it's going to affect the market yet, but we got some interesting information out this morning from the government. Let's see what's going on with your money with a little help from Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you today?
Good morning, Dave. Doing well. Today is Thursday, is jobs day, it's revised GDP day. I mean, a lot of economic news coming out. And we even got some good news on the retail front, as well as some big name retail establishments are reporting their earnings and giving some guidance.
Well, that much we're glad to hear because we got some good news on that front. We'll start out with the good news of yesterday. It was actually a positive day. The Dow was up by 192 points, Standard & Poor's 500 up by 37. NASDAQ even managed to eke out a 1.5% increase, up 170 points yesterday. And then that brings us to this morning, and the thing that you and I have been talking about now for over a week, the second look at the gross domestic product figures from the first quarter. And, we got 1.4% worth of decline when the first look out at it came out last month. We were all figuring the market was expecting to see that number get revised to a little bit of an improvement. Second look at it, it's even worse than we expected, down a full 1.5% in the first quarter. That's not exactly what Wall Street was looking for, is it?
No, it's not. They were looking for an uptick by just a little bit to a negative growth of 1.3. And so it actually went the opposite direction, down another 0.1% to 1.5%. So yeah, definitely went the wrong direction. But I got to tell you, Dave, it's not affecting the futures this morning. They continue to climb.
And that was my first question of you when we got together on the phone before going on the air. All right, you get the instant quote reactions. What's the market doing? And you said, it's still green. I don't get it. Must be the concern over the jobs, and the state jobless figures look pretty doggone good. First-time unemployment claims still inordinately low for a normally functioning economy, only 210,000 first-time jobless claims, and the continuing claims up by a tinge, but still statistically insignificant. Our employment front is still pretty healthy. At least one leg on the stool that would augur a recession isn't looking like we're getting it, does it?
No, it doesn't. And to add that, when the FOMC minutes came out yesterday, several headlines that I saw were like, hey, look, based on what we're seeing now, the Fed is going to raise by 0.5 point from now until who knows when, which is longer than anybody expected. And so I thought that the markets would have started to decline yesterday and continue into today. But obviously, the only thing I can kind of start thinking of is we've had really a rough week last week. I mean, we were down significantly, and maybe they think that this is a slowing down or a bottoming out and considering a buying opportunity. But you don't know that until, several weeks down the road, you look backwards to see was it or was it not.
Absolutely. Yeah, we didn't mention the Fed minutes yesterday because we had so much else on the table, but at 2 o'clock yesterday afternoon, the Dow numbers went, hiccuped up, down a little bit when they read the minutes, and then just pretty much climbed through the rest of the day. And that was where we got most of our gain yesterday, in the time after the Fed minutes came out telling us that the Fed was going to kneecap us with interest rates even more aggressive than we expected.
Yeah, I mean, the only thing I can think of from that standpoint, Dave, was maybe it gave companies, it gave economists more certainty of, okay, this is the path the Fed's going to take. Now we know it, but I gotta feel like it's going to affect things like GDP down the road, our growth rate. It's gonna, unless they think it's going to drive inflation down faster, which I don't see that right now.
More likely flush us into a recession a little faster more than anything else. Yeah, and the fact that NASDAQ was our biggest percentage gainer for the day yesterday, even after seeing projected interest rates, I got to believe your guess is on target, that because money does not like uncertainty. Even if we don't like the news, at the very least, we now know what it's going to be, and that makes things a little bit better for traders on Wall Street. They know where to go and what to buy.
That's the only thing that I can think of, Dave.
Yeah, there are times Wall Street makes absolutely no sense, even to people who make their living watching Wall Street, and this is one of those times. We do have some good news this morning after getting some really crummy retail news out of some really big retailers last week. The picture this morning is a little bit rosier, including one big one. I gather Macy's kicked butt, didn't they?
They did, Dave. They did have a great quarter, better than expected profit and revenue. And then they came out and raised their full year forecast. So when a retailer does that, that's just some good news. They got a boost, they say, from, people going back to work, right? So we got to update our wardrobe. And so they saw a high demand for that. And then now, there's other gatherings, right? There's charity events, there's conferences, there's conventions. So now people are having to replenish or get back up to speed on their wardrobe. And so good news for Macy's. They're up about 13% this morning.
Wow. From a store that we were almost ready to light a funeral pyre for a few years ago, actually being the one that might just lead a resurgence in some retail stocks. That's kind of nice to hear. Other end of the chain, I also saw Dollar Tree had a good quarter, which kind of on the opposite end of the spectrum for Macy's. Even the discounters are doing better this week.
They are, yeah. Macy's, we were talking about them going bankrupt not a couple of years ago, but
yeah, we were ready to light a funeral pyre for them for a while, and now all of a sudden they're kicking butt and leading the parade.
Dollar Tree, they did well. They had better than expected top and bottom lines as well as like Macy's did. And here's where they really shine. Their comparable same store sales increase double what the street forecast was. So they did twice as well as the estimates were for their same store sales. They're up 11.6% right now, and they're kind of in the middle of the range, but a nice little move. It's not a cheap stock, Dave. It's like $218 right now.
Their stock is not exactly in the Dollar Tree range, is it?
Yeah, it's not. No, it doesn't follow suit.
Given the fact that it wasn't that long ago, they announced that, we're going to have to desert our everything's a dollar thing and go up to $1.50, $2 and more for some of our items. Evidently, their customers still recognize they're still selling on the cheap, even though they kind of broke their marketing pattern.
Well, yeah, I think they didn't really have a choice, right? When you have 7-8% inflation and supply chain issues, that they just didn't have a choice of anywhere else to go. But like Dollar Tree, Dollar General also reported, and they beat the results too. And here's now they were expected for their same store sales to drop. That was the expectations, and they did drop. But they did not drop near as much as the street expected them to drop. So they came out and actually have boosted their same store sales forecast for the rest of this year, saying that with inflation the way it is, we're seeing shoppers return to the discount stores trying to save every little dime they can. And so we've got Dollar General. Let's see, Dollar General. Nope,
they're toward
Dollar General. Yeah, they're about 15. They're about 15% right now. So good. Get some good news from them, helping them out significantly too.
And they're also not a cheap stock. They're in the $220 a share range.
Yeah. So, hey, I got one more retailer for you. Now, this one is I consider it a high-end retailer. Williams and Sonoma reported, and they beat across the board. Same store sales increased. Now get this one, triple what the estimate was. Yeah. So people are going back out buying gifts, spending money. And here's where they came out and said, unlike a lot of retailers that are having to, skinny their profit margins, Williams and Sonoma said they expect their profit margins to hold steady for this quarter and into the future.
Hmm.
Yeah,
It's
so they're trading up almost 9% this morning.
it's not a price sensitive market they cater to, so I guess they figure they can just maintain their usual formulas even in a day of raising prices.
Yeah. So we've seen a lot of good news on the retail front today, Dave, but I got to tell you, there is a little red ink here and there.
Well,
Um,
we got time for a couple of red ink numbers. I'm so optimistic right now, I'll even let you throw some water on my fire.
all right. So we had a medical device manufacturer, and we've got a chip maker. So Medtronics reported for the last quarter, and they missed on expectations. And so they're impacted by global supply chain issues is really hurting them. They're down 5.25% this morning. They're getting close, not there yet, but almost to their 52-week low. And then the last one I have for you is NVIDIA. They're the chip maker, the graphics card maker. They had an okay quarter as far as their current quarter, but they gave weaker than expected guidance. Again, supply chain issues, slower business in Russia, because obviously Russia's got more important things to do than buy computers right now. And so they're trading down about 4% this morning.
I wonder if another factor on that is the Bitcoin crash, because NVIDIA's video cards are integral to Bitcoin mining, and those high-end video cards, if the Bitcoin market is kind of going soft, not as many people upgrading those. That might be a part of it as well. That's been
That could be a part. That's right.
That's been their
Definitely.
really big, I knew, moving product. Anyway, up day yesterday on Wall Street, surprisingly so. 45 minutes before we opened, do we still have green ink showing, Phillip?
We do, Dave, and it's continue to rise as you and I have talked. So we got the Dow right now up almost 0.7%. We've got the S&P 500 up a little over 0.6%. The Nasdaq, it's lagging a little bit. It's only up about 1/3%, and the Russell 2000's up almost a little over 0.6%. So everything's moving well on that front. Gold and silver, though, are getting hit again this morning. Silver's down another 1/3%, and gold's down 1/4%. So the metals are getting hit. I do want to mention this because I saw it hit my ticker yesterday. Natural gas hit, I think, an all-time high yesterday, and it may follow through today. It's up another 2% this morning, trading at $9 and a 9.17. However they measure that, but I remember it was $2.30 or $2.40. So a big move on that. And then crude oil is up 0.7%, 111.09 a barrel. I think it's a little less than what it was yesterday.
I was going to say about the same zip code, although a little lower from yesterday morning. Overseas markets, it was a mixed bag in the Asian rim, some up, some down, no big moves either side of the zero line. Europe, on the other hand, is looking at us and saying, oh, okay, they're coping, we'll do the same. They're up markedly in some cases halfway through the European trading day. This is one of those times where we can't explain why things are going up with that GDP report, but they are. That's good news. Do you want to count on it? Do you want to put it in your IRA that way? That takes advice. How do I find you to make it happen?
Hey, Dave, folks can give us a call for a free 30-minute, no obligation phone consultation. We'll answer their questions, make sure they're on the right track. We call that our core retirement phone consultation. It's that simple. Just give us a call at 863-382-0037. And then join us this weekend for a Memorial Day show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And one more time for this week, tomorrow morning, about the same time on Light FM. Phillip, thank you so much. I'll see you then.
All right, man. You have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. And remember, I'm here if you need anything. Reach out, give us a call, schedule our core retirement phone consultation, 863-382-0037. With that, I hope you have a great day. Talk to you again tomorrow. Bye.